Come to the next paragraph, retention. What is retention? Out of the progress billing, depending upon the agreement, the customer while paying the amount holds back some part. This difference is called retention. Progress bill amount minus the amount paid by the customer is called retention. Why do you think customer retains some amount? Because one, it puts a pressure on the contractor. He will fulfill the terms and conditions specified in the contract. He will work according to the design, timeline. If there is any defect noticed, that will be rectified. If you pay him entire amount and once the work is complete, later on he will say Tata. How will you get the defect noticed, rectified later? So therefore, generally in large and long-term contracts, some amount should be retained so that the contractor works properly. At times, a period may be specified in the agreement for which retention will be held back. Retention are amount retained by the customer and therefore for accounting purpose, it will be treated as a current asset, maybe non-current asset, depends whether is going to pay after 1 year or within 1 year. Within 1 year, current asset. Beyond 1 year, non-current asset. And how do you compute it? Mathematically, progress billing minus amount paid is equal to retention. What is advance? Advance is that part of the collection from the customer which is received before the work is performed is known as advance. So advance will appear as a liability in the books of the contractor. Some question answer session will begin now. Question number next. ASF Limited is carrying out a contract. It raised progress billing worth $60 lakh on customer number 1. The customer paid $5,40,000 after deducting 10% of the amount to be held as retention for the year. Customer number 2 paid $50,000 for an activity not yet commenced. How will this item be disclosed in the financial statement? First answer, customer number 1. Assuming it is probable that $60,000 will be received after 1 year, full revenue of 6 lakh will be recognized and the amount of 60,000 will be disclosed as receivable, that is an asset. And customer number 2, 50,000 received towards an activity not yet commenced will be an advance, will be shown as a liability. Next question, CIMA contractor is working on a contract and has a progress bill amounting to 8,50,000 on Gary. Gary paid $6,52,000 after deducting 20% retention amount to be held for 2 years. Larry paid $1 lakh for a contract not yet commenced. Same question. How will be treatment given in the books of the CIMA contractor? Same answer. In case of Gary, assuming that the amount will be received. Assumption. Recognize 1,63,000 as a receivable, as an asset. And in case of Larry, $1 lakh will be treated as advance. Now we'll see the presentation in the statement of financial position. Okay. In the statement of financial position, it will contain 2 elements relating to contracts where performance obligations are satisfied over time. And when we'll solve the next 2-3 questions, you will see how the accounts balance comes in the statement of financial position. One is we will show contract asset. or contract liability. Okay. How to calculate it in the next paragraph. And the next we have already discussed in the last two examples, trade receivable or advance. Trade receivable is basically retention amount and advance is the amount paid in advance by the customer. How to compute contract asset or contract liability. So for that we will calculate contract cost incurred till date. Contract cost incurred till date. So you are going to open an account called contract asset account. In that contract asset account, whenever you incur the cost, you keep on debiting that account. Contract asset account debit to bank account. Contract asset account debit to creditor account. So contract cost incurred till date. To that, I am going to make adjustment for profit or loss recognized. What is the profit or loss recognized? It is the difference between contract revenue recognized minus contract expense recognized. Is it right? Accounting entry I have printed below. Wait. So that also you will add, because this entry will also be routed through this contract asset account only. For contract revenue, contract asset account debit to contract revenue, and for contract expense to be recognized, contract expense account debit to contract asset, and revenue and expense are transferred to SOPL. So therefore this entry, these two entries will have a positive or negative effect depending upon how much amount you recognize. And then less progress billing. Progress billing, amount invoiced till date. Amount invoiced till date. Entry for this will be progress billing account debit, or you can say the customer account debit, to contract asset account. Okay. And now you compute the net balance. So all the accounts relating to this contract brought at one place, net effect in the contract asset account. Now sometime the balance can be positive or the balance can be negative. If it is positive balance, then you call it as a contract asset, present it on the asset side. If the balance is negative, then you call it contract liability and you present it on the liability side under the head current liabilities. Okay. So by opening a contract asset account and by passing these four entries, you will automatically get the balance. And the balance can be positive or negative. How do you get the trade receivable account or advance account? Open one more account which we will call customer account. Okay. Whenever we raise the invoice, customer account debit to contract asset. When he makes the payment, bank account debit to customer account. Difference. If the difference is positive, trade receivable. If the difference is negative, it is advance. Right? So these two accounts we have to present in the SOFP. Now dear student, let us solve this question with journal entries also, ledger account also, and presentation in the SOFP also. Okay. So this will give you a good idea how the accounting is done. And then after that we'll take a more complicated one. Contract price $2 lakh. Cost incurred till date $90,000. Estimated cost to complete 64,000. So can I estimate the total cost that this project will require? 90 plus 64, 1,54,000. Progress billing, 1,16,000. Out of 1,16,000, $1 lakh has been received. Estimated progress towards completion, 60%. Now this question can have two percentage completion. One based on the question 60%. If this was not given, then I will take input method 90,000 divide by total cost 90 plus 64 154 90 by 154 Haji around 58.44%. If I take 90 divided by 154, if this is given, use this. Not given, then use this method. Okay. Question: prepare extract from SOPL and SOFP. You also write one more question. Pass journal entries and prepare important ledger accounts. Pass journal entries and prepare important ledger accounts. Each and every line and question is important. Okay. So first point. In all the question, if possible, we will do this testing. At least mental testing also you can do if you don't have time in the exam to write. Whether there is any anticipated loss in the contract. So the answer is check total revenue that we expect to receive 2 lakh. Check total cost that we expect to incur 90,000 already incurred plus 64,000 we are going to incur. So therefore my total cost is 1,54,000, hence expected profit is 46,000. So there is no need to make provision for additional loss. Second point, the outcome of the contract can be estimated reliably. Hence we will follow stage of completion method. Progress towards completion. Note, this is given in the question 60%. So 60% of what? 60% of total revenue estimated will be recognized as revenue. So tick mark, revenue to be recognized 60% of 2 lakh. Is it 1,20,000? Cost to be recognized 60% of 1,54,000. 92,400. So profit 27,600. This is your presentation in SOPL. And how will your SOFP, statement of financial position, look like? So here we will show contract asset. How? Contract cost incurred we will write. How much is contract cost actually incurred? 90,000. How much is the profit oblique loss? 27,600. Already calculated. This figure will come from here. Or you can write revenue recognized minus cost recognized as expense in P&L account. The difference between the two. Minus progress billing you will write. 1,16,000. So therefore the contract asset will be 1,600. Check the answer. And one more thing that will appear in the SOFP is your trade receivable under current asset. Progress billing 1,16,000 less cash received 1 lakh. Therefore balance receivable 16,000. Now in case if you have to also understand the journal entries and ledger account, it would look like this. First is entries you have to pass during the year. Whenever you incur the expenditure on goods and service, for example, you will buy material, labor, expense, the entry will be you open an account called contract asset account. Okay, you can give it some name and number and you will write contract asset account debit to cash oblique bank oblique payable account. In case if you have purchased material on credit, then being amount spent on the contract. Periodically you are going to raise a bill on the client. Entry would be trade receivable account debit to contract asset. In this example 1,16,000. Being the entity to record bill raised on the client. So basically what they have done in this example, they have just kept two accounts and all the entries will be routed through these two accounts only. However, practically companies may open different accounts and then accordingly they can keep a track. That is up to them. But I will suggest to follow this only. This is simple. Company receives cash from the customer, cash or bank account debit to trade receivable, 1 lakh amount to record cash received. Entry number 1, 2, 3 will keep repeating throughout the year. Every time that transaction takes place, those 3 entries will keep repeating throughout the year. Now at the end of the year, we will sit down. We will take a calculator, check the progress. Progress is 60%. I will recognize now revenue. Okay, based on the work done. So contract asset account debit to revenue account. This revenue, we'll call it contract revenue, will be transferred to statement of profit and loss. And then again one more entry will pass. We'll estimate total cost multiplied by percentage completion and recognize contract cost expense or contract expense account debit to contract asset SOPL. It will also be transferred to P&L account. So automatically the difference between the two will show you the profit from the contract. In the P&L account, one credit, one debit, net effect, profit and loss from that contract. And then understand through ledger account also. If you have to prepare contract asset account, how does it look like? We'll go entry by entry. First we incur the cost. Every time we incur labor material expense. Asset, contract asset to cash 90,000 in our example. Bill raised on the customer by trade receivable 1,16,000. Revenue recognized to SOPL revenue recognized 1,20,000. Cost recognized by SOPL cost recognized 92,500 400 and by balance carried forward 1,600. This is called gross amount due from customer. It can be a balance on this side also. Then they will call it gross amount due to customer. If they ask you to prepare cash account, that's the easiest thing you can do. On the credit side, we have by contract asset cost incurred. Debit side, we have to trade receivable amount received from the customer and by balance carried down. Trade receivable account, that is customer account. When we raise the bill, debit side to contract asset progress billing 1,60,000. When he makes the payment by cash 1 lakh by balance carried down. SOPL, by contract asset revenue to contract asset expense, difference is profit. Okay. Now in the same question, what they are going to do now, they are going to make a small twist. And what is the twist now? They are saying that suppose in the previous example, the progress bill amount was 1,26,000. So the format of SOFP would change now. Entries would be the same, but the calculation will give you a negative figure now. In the SOFP, cost incurred 90,000, profit recognized 27,600, but progress billing figure will be 1,26,000. So this gives me a negative figure. So this will call contract liability. Okay. And similarly, the trade receivable figure will change. Progress billing 1,26,000, right? Cash received 1 lakh. So now the trade receivable will be 26,000. Is it right? Is it understandable? Now, dear student, we'll solve a little complicated question because there is going to be a loss in a project. and it is the second year of the project. What problem we solved in the first problem was oversimplified, that was first year. But the story changes in the second year because we have to do cumulative calculation, cumulative completion. Some revenue and some cost we have already recognized in the earlier year, right? So this year I am going to also adjust the revenue and cost which were already recognized in the previous period, right? Keeping that in mind, let us solve very important question. From the following detail, calculate profit or loss and show the presentation in the financial statement. Right hand side 2 column, contract X, contract Y. Cost incurred till date. Cost incurred till date. Each line read carefully. Total contract price. Progress billing. Anticipated future cost. Now see, you have to do one calculation either mentally or in the notebook whether there is an anticipated loss or not. So if I check for X on your calculator, 39,200 plus 16,800, how much is that? 56,000, which is much below the contract price. So X is a profit generating project. Come to Y, 42,000 plus 25,200, 67,200. Oh, there is a loss. How much is the expected loss here? Minus 56,000, 11,000. That means till the end of second year, we need to recognize a total loss of 11,200. Next is payment received. On contract X, we have received 11,200. Contract Y, 0. Contractual obligation satisfied till 31st December 2086. It seems it is current year. So 60% work has been done, 50% work has been done. Last year, till the end of last year on project X, 30% work was done. And in this case, one star mark is there, asterisk mark, and it was not determinable, which means outcome of the contract could not be estimated reliably. Okay. Recognize revenue. Now this is already recognized in the last year. This I will deduct from total revenue to be recognized minus 19,600 for current year. Similarly, total revenue to be recognized minus 5,600 for project Y, and cost recognized. You can see in the project Y column, previous year the revenue and cost recognized are same because the outcome could not be estimated reliably. And in the previous year, no loss was expected on contract Y, previous year data. So that means there is no provision for the loss. Okay. No opening provision for the loss. So like previous question, first I will check what is the anticipated final result. Keep calculator and pen pencil ready. You have to write something if I ask you. So first you should check whether there is a loss generating project. Project X, as you correctly said, has an anticipated profit of 14,000. No need to provide for expected loss here. But project Y, contract price is 56,000. Cost incurred till date 42,000. Anticipated future cost is 25,200. Expected total cost 67,200. Therefore, there is an anticipated expected loss of 11,200. Okay. So while Providing for the loss, we have to ensure total loss provided is 11,200. First part is clear. Step 2. In step 2, first you write down the name of the contract at the top here. Contract X, contract Y. Okay. And then let us learn the revenue recognition. Formula for revenue recognition is, I have written that formula, total contract price into percentage completion. Total contract price 70,000 into 60%. Keep question in front of you. Is it 60% till date? 42,000. 70,000 into 60%. 56,000 into 50%. 28,000. Cumulative revenue recognized previously. Now where will you get this figure? In the question book. Second last line in the table. Check. Is it there? 19,600 and 5,600. Both figures are available in the question. No need to apply any extra intelligence. So therefore, revenue to be recognized for the current year. A minus B. 42,000 minus 19,600. Please check. 22,400. 28,000 minus 5,600. 22,400. There is a note also written for you. In the exam you need not write it because this figure was given to you. That where the outcome of the performance obligation cannot be estimated reliably, IFRS 15 requires the revenue recognized to be equal to the cost incurred to the extent they are recoverable. Therefore, it is assumed that revenue recognized for contract Y for year ended 31st December 2015 was 5,600, that is the cost incurred. But in the problem they have already mentioned it also. If suppose it was not mentioned how much revenue was recognized in the previous year, then this note would have been useful to you and you could have assumed 5,600. Now take a pencil. Some rectification would be required. Next step number 3 would be to calculate the amount of expenditure to be recognized in SOPL. So first is contract X, right here topic heading contract X, contract Y, and then contract X calculation. What is the expected total cost? 56,000. Where is this 56,000 in your answer? In step number 1. Can you see 56,000 into 60%? 60% is given in question. Check the calculation. Are you getting 33,600? And for Y, again go to step 1, second line. Total cost is 67,200. Total cost is 67,200 into 50% is 33,600. Okay. Now in this case, project Y, we have to also make an allowance for future loss. We have to also make an allowance for future loss. How much? For that we will do the calculation note number 2 below. Is it right? So note number 2 below has some calculation adjustment we have to do. First point is there cumulative loss. So I have just made a small additional words. Overall cumulative loss, that is expected loss, write in bracket expected loss as per stage 1, expected loss as per stage 1. Is it 11,200? So I need to recognize a total loss of 11,200. Now this year I am going to recognize some loss. This year I am going to recognize some loss automatically. Sir, how? For this year, I am going to recognize the current year revenue and cumulative revenue minus cumulative expense. So you go to stage number 2. Stage number 2, just look at the project Y column. Total revenue that I am going to recognize for both the years is 28,000. Is it right? It's written stage 2. You also write. Minus total cost that I have to recognize in both the years 33,600 stage 3. This is the figure 33,600. So this 33,600 I have to recognize. This 28,000 I have to recognize. So automatically my books of account will show a loss of 5600. If I recognize 28,000 revenue and 33,600 as cost, automatically P&L account will have a loss of 5600. But I need to make a total provision of loss of 11,200. Therefore, I need to make an extra provision of loss of 5600. Okay, so now what you will do, you will make some presentation change here. Less cumulative revenue minus cumulative expense. Write in bracket 28,000 as per stage 2 minus 33,600 as per stage 3. This will be easier for you to check later. And delete the other words which are not required. So I will make a full provision 11,200. 5600 comes on its own in the books because of percentage of completion method. 5600 more I will recognize. I will pass one more entry, P&L account debit to allowance for loss 5600. Now come back to that first part. So there we had written 33,600, add allowance for future loss 5600, less cost recognized up to previous year. In bracket write given. Go to the question. In the question, the last line of the table, 15,400 is there, 5600 is there. This much I have already recognized up to previous year. So how much more cost I need to recognize now? 18,200, and here you need some correction, 33,600. 33,600. Have you corrected 33,600? You are in stage number 3. You are in contract Y column. If you take the total 33,600 plus 5600 minus 5600, this figure is 33,600. These are cumulative calculations. Now we'll come to current year calculation. Current year revenue recognized. Go to stage number 2, third line. Write in bracket stage 2, third line. 22,400, 22,400. Is it there? Are you able to tick? Stage 2, third line, and then expenses. Stage 3, again that balance line 18,200 and 33,600. This 33,600 includes the provision for anticipated loss also. Or if you want to write separately, then this figure you have to reduce slightly. Okay. Therefore, net income, first project X 4200, project Y must show 11,200 as the answer. This is for current year. Now come to cumulative effect for both the years. Under cumulative effect revenue, 42,000 line number 1, stage 2 line 1. Line number 1. Can you locate this in the stage 2 line number 1? 42,000 and 28,000. Expenses including anticipated losses 33,600. Make it 33,600 here. This figure 33,600. This one. This is from stage number 3. And this figure 33,600 plus anticipated loss, that is 39,200. So write the working for this below or on the particular column. 39,200 is the cumulative expense recognized plus loss recognized. Therefore, net income or net loss recognized for both the year, check 8400 is there. And again you cross check, this answer is coming to 11,200 negative. Is it right? Say yes. Now come to SOFP presentation. Statement of financial position. Cost incurred till date. It's given. Go to question. In question, you search for cost incurred till date, first line of the table. 39,200, 42,000. Add recognized cumulative profit less loss. That is why we prepared the previous table, stage number 4. Stage 4, write in bracket here. 8400, 11,200. Less progress billing. Write in bracket given. When I am writing given, where will you go to search for this number? Question. And when I am writing the stage number, that figure will come in that particular stage number. So progress billing 33,600 and 28,000. Therefore, contract asset or contract liability 14,000 and 2,800. Both are positive? Okay. And now next question is how much trade receivable will appear. So for trade receivable, first I will write progress billing, cumulative, given in the question. Third line, 33,600, 28,000. And what will you deduct here? Amount received. Where is that figure? Again question. Write in bracket given. Given. It is given in fifth line, 11,200 and 0. So therefore, trade receivable will appear in balance sheet SOFP as 22,400 and 28,000. Okay. Now you come to one question number 30. 30. Printed after a few pages. State whether the following statement is correct or incorrect. All types of questions are asked in the exam. Do you know that? All types, whatever your mind can imagine, they will ask you. State whether the following statement is correct or incorrect. Only look at the screen. While estimating the progress in the completion of a contractual obligation, an entity can use any of the two methods, input method or output method, irrespective of the other factors and basis. Irrespective of other factors or basing, you can use input method or you can use output method. Incorrect. Why? It depends on facts and circumstances of the case. One example we had discussed earlier also. You have to manufacture 20 items. You have manufactured 18 items. If I go by this method, output method, 90% work has been done. But if I look at the cost, only 30% cost has been incurred on these 18 items. So one has to see which method will be more appropriate. So the standard does not give you a choice of input output. It only gives you a guidance. It helps you to apply the standard. Okay. While estimating the progress in completion of contractual obligation, an entity can use any of the two methods prescribed. However, the selection will be based on judgment and factors so that it matches with the success in performance of obligation. One more question just above that. State whether the following statements are true or false. Question number A. A contract related to construction of asset or assets will be always assumed to have only one performance obligation. Yes, true. True. False. Why? There can be construction of asset where it can be having multiple performance obligation also. Okay, so first I'll read that answer. False. The accounting does not depend on the contract but on the contractual performance obligation. A contract can have more than one performance obligation. Question number B. Revenue recognition depends on satisfaction of contractual obligation and control will always be transferred at a point of time. False. Why? Even though revenue recognition depends on satisfaction of contractual obligation, control can either be transferred at a point of time or over a period of time. Again, come back to previous pages. Question number 25. An accountant of a construction company approaches you. Okay, that's so much of intelligent student. Accountant of a construction company approaches you. He informs you that there is a likely loss of $2 lakhs on one of its contracts. He requests you, see what is the idea? He requests you to suggest a method whereby this loss, being only a future loss, need not be recognized. You are such a smart person. Give some guidance how to avoid recognizing this loss. So then you have to write this is not an option. As per IFRS 15, anticipated loss will be provided. Not as per IFRS 15, as per IS 37. Contract has become onerous contract. Contract has become onerous contract. Expected loss will be provided as per IS 37. Okay, one more question below that. An enterprise incurs a cost of $40,000 not related to the progress of work to date, but it is related to future activity. So will it be recognized as an expense? How should it be presented? It should be presented as an asset to the extent it is probable that the cost will be recovered. Okay. Now we'll take one more question which has 3 years involved. Classwork. There are some typing error which you just check. This problem has 3 years involved now. And in this period problem, the consideration is varying. Frank Pipes PLC is awarded a contract worth $22,500 to lay a pipeline. So what is the contract revenue originally agreed upon? $22,500. The revenue agreed initially is $22,500. Initially Frank estimated a contract cost at $20125. It is expected that the work will take 3 years to complete. Frank's estimate of cost increased to, again right here, 20,500 by the end of second year, full stop. Frank's estimate of the cost increased to 20,500 by the end of the second year. The customer approved a variation. which means there must be some change or modification in the design or other thing, but it has to be approved, which was approved in third year, $2,000. So my transaction price will change in the third year. It will be 22,500 plus 2,000 now. So my transaction price will become 22,500 plus 2,000 is how much? 24,500. Wait. Standard material valued at $500 stored at the site to be used in future to complete the project were included in the cost for year 1. So this cost is for future activity. Remove it, show it as a separate asset, and remove it from the contract cost that is given to you in the problem. Frank determines the performance of contractual obligation for the contract by calculating the proportion of, what is the formula for calculating the percentage of completion? Cost incurred for work performed upon estimated total contract cost. And then they are so kind, they have given you a summary of data also. Initial amount of revenue agreed in the contract in all three columns, 22,500. Variation add in the last year, 2,000. So estimated total contract revenue is 22,500, 22,500, 24,500. In the exam, they may not give you this table. Okay? They may or may not provide you with this table, because this much you could have done yourself also. They can just give you contract cost incurred till date, which is 5233, 15420, and finally they have incurred 20,500. And again, this you may have to compute on the screen. They have given you this figure in the beginning. They have given you this figure now, which means the balancing figure is the contract cost to complete. Then estimated profit. How did they get this estimated profit? Total contract revenue minus total contract cost is estimated profit. Progress billing, cash received. Okay. Then what is the question? Find out the amount of revenue, expense, and profit to be recognized for each of these years. Now, what you'll do in such questions, if they just ask you revenue, cost, profit, first find out the stage of completion. First year, be careful. There is a note in the problem, standard material valued at 500 stored at the site to be used in future to complete the project were included in the cost of year 1. On the screen, understand, 5233 includes this material for future. Reduce it. Okay. Now divide by, first year my estimated total cost is 20,125. Are you getting 24%? Say yes. Yes. Second year, 15,420. Can you see 15,420 in the table? Divide by total cost 2,500. Are you getting 75%? And third year, the entire work has been done. The answer is 100%. Any query on this percentage completion? And to help you, I have written a note also. For year 1, determined by deducting the value of unused material from the cost incurred, 5233. Now you see how to recognize revenue, expense and profit. This table will help you to solve it fast. Year 1, Where is year 1? Okay. To date, prior year, current year. Follow this. This is simple. First year is 22,500 is my expected revenue into 24%. 5400. Yes or no? Then expected cost 20125 into 24%. 4830. Year 1 tick mark. So therefore profit is 570. Is there any previous year? No. So my revenue to be recognized for current year is same 5400. Expense to be recognized is same 4830. And profit to be recognized is 570. First year is understandable. Wherever year 1 is written, tick, 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 3 ticks. Now year 2. Check there only year 2. Year 2. What is the work done by the end of year 2? 75%. Do you agree? Yes. So 22,500 is my total revenue expected. This figure you will get in first table, third line. Into 75%. 16,875. First you see the figure and then you tick mark. Expenses 20,500. First table, can you see in the sixth line? 2,500 into 75%. This is the cumulative revenue and cost to be recognized. But now what you do? Take these figures, shift it here. This I have already recognized. So balancing figure I will recognize in the current year 11,475 and 10,545. Okay. So profit will be 930 for the second year. Now come to year 3 below. Year 3 revenue 24,500 full. Why 24,500? It was 22,500 till last year. One variation has been approved. So transaction price has changed. Cost fully incurred. Total profit 4,000. Out of that, till previous year, we have recognized revenue of 16,875, cost 15,375. So balancing figure we will recognize in this year as revenue and cost, and therefore profit for this year 2,500. Okay. Good, they have not asked you to pass journal entry for all 3 years and prepare SOFP and ledger accounts. That you will try as homework. Done. Doesn't seem to be very happy information. At least you should try whenever you are free. Now we'll come to the last part of this wonderful chapter, that is called service concession arrangement. This is for public-private partnership type of projects. In order to develop infrastructure in a country, government will do whatever it can, but government itself cannot do everything. Yes or no? Because government does not have resource. Government does not have necessary funds. So now in many countries this scheme is done. What is the scheme? This is the road that needs to be constructed. So government will enter into a contract with a company who will construct this road. So government gives him a right to access to this road. This is not your road. How you can start doing construction? So government gives you a right to access and then you can construct. So they do the construction, then operation, maintenance, upgradation, okay. These all services they provide. But then the question is how to recognize revenue, how to recognize cost, whether this road will appear as an asset in the books of the contractor. So lot of difficult accounting issues get involved in such projects. And that is why they have given a separate discussion on this. Okay, there is an IFRIC on that. International Financial Reporting Interpretation Committee on this. They have given a guideline on service concession arrangement accounting. So increasing participation of private sector in building, upgrading, maintaining, operating, okay, public infrastructure has resulted in a new form of arrangement involving PPP, public-private partnership. And it is not only for the roads. Road is there, flyovers are there, metro projects are there, port is there, airport is there, hospitals can be under this project, etc. Where a public infrastructure is involved. So such partnership between the government and the private entity are called by other names also. So one is called, as we see, PPP. Second is public to private service concession arrangement. Also called build, operate, lease, transfer arrangement. In short, it is called BOLT. First you build, then you operate, lease, and then after that contractual terms are over, you transfer it to the grantor, or it may also be called as rehabilitate, operate, transfer arrangement, and some other names also. Are we interested in the names or the accounting? Both. Some names I have given, remaining name you find out yourself. Now the question is accounting part. First we'll see who are the parties involved. So there are two parties involved. They are called grantor and operator. Grantor and operator. Who is the grantor? Government or government agency, whatever you can call it, normally government. And who is the operator? The private party usually, who will invest his money first. He will borrow money, put his own equity, form either a new company or a new unit, whatever, and then they incur all the expenses. But their risk is that how to recover the cost. How to recover their expenses which you have incurred. So normally the operator earns in two ways. Which two ways? One, the government gives them a license to collect the service charges, user charges, popularly called toll or user charge, or it can be called user charge also. In airport you don't collect toll, you collect user charges. Okay. In hospital you charge some user charges. In metro also you will charge some user charges. Whatever you call it. So that right is given, and then the government will decide for how many years that right will be given to you. Second thing, In order to ensure that public is not looted, they also regulate the rates. They also regulate the pricing. Okay. So that you will not overcharge the customer. Once the flyover is constructed, everybody has to use that. That does not mean you will charge 5,000 rupees for a two-wheeler passing from that highway or project flyover. So rates are regulated by the grantor. You only have a right to collect the fees, toll, user charge. You don't become the owner of that asset that you have constructed. Second model is don't charge the public. Then how will I earn? The grantor will pay you. The grantor will pay you. Okay, over a period of time, a certain amount of money periodically. So like in this example, the construction of the road, one option can be you collect the toll. Second option, don't do anything. Government will pay you every year 200 crore rupees for 20 years. Is it right? So that will recover your construction cost, operation cost, maintenance cost, upgradation cost, resurfacing cost. What is resurfacing? In case of road, after few years the roads will be damaged. So then the condition says that after every 5 years, you have to resurface the road. That can also be done. But we will pay you 200 or 250 crore every year for so many years. All these forms of arrangement gives the private party the right. What is the right he is getting? To construct or upgrade the public infrastructure, for which it is usually conveyed right to collect fees from users of such infrastructure. Normally the government will give you right to collect the fees only. Government will not take the burden of paying you a certain amount every year. Okay. So that means government is just enjoying the show from a distance and getting all the credit for the good work done. The work is done by the service provider. Payment is made by public. And collect fees from users of such infrastructure and other materials that are provided. Essentially, the control of the infrastructure usually vests with the grantor. Who is the owner of that infrastructure? Grantor. You can say grantor means the government. Then this IFRIC or this chapter is applicable only to those service concession arrangement where the types of service that must be provided, to whom it must be provided, and at what price it must be provided, to whom, at what price, type of service is regulated by the grantor. Okay. So government will say that this is the highway you have to construct. These are the 2 points. This is the service you will provide on this highway. And this is the toll that you will collect. Then this standard is, or this chapter is applicable, service concession arrangement. Any significant residual interest in the infrastructure at the end of the term. Suppose it's a 20-year arrangement. After 20 years, the infrastructure will belong to whom? Is controlled by the grantor through the ownership, beneficial entitlement or otherwise. So throughout this accounting, we will remember that grantor is the owner, operator is not the owner. Operator is not the owner, now he will not become the owner in future. How to do the accounting in the books of operator, that is what is my issue. Okay, so now we will continue tomorrow.